So first of all, let me just quickly break down a simple boomerang setup. So we've got something like this. We've got a breaker structure. As you can see, breaker structure. And now we've got the two significant areas, right? So we've got the high and we've got the current low. So just bear that in mind. Now what's likely to happen next? Again, there's going to be a major pullback within here. There's going to be new highs. There's going to be breaker structure. There's going to be another new high, potential new lows. All this is insignificant because we're still stuck within the range of the main high and the main low. So anything in the middle is just a pullback. All right, so what's likely to happen now is you will see a boomerang, let's say approximately here. So this is just complete freestyle, and let me see, there we go. All right, there's a bit of an expanding pattern here. And then what happens is on the boomerang, there's a third tap rejection to entice traders to go short. Now, obviously with a bank level, which is up here somewhere, or potentially even a banker block or even an imbalance, whichever comes first. As you can see, on this occasion, there's a banker block and a bank level. There's a third tap rejection, as you can see, right? So right now I'm just going to show you a basic boomerang pattern. So 1, 2, and 3. The third tap normally entices traders to go short. What happens next is there's a fake out of the pattern and then it just completely melts, right? So that's one sort of schematic of the boomerang. Let's look for another clearer one, would be something along the lines. And normally what you'll see is price will rally. We'll see a nice compressed wedge such as this, and then the fake up the boomerang and then a drop to the downside. So this is a textbook boomerang, right? Look, 1, 2, 3. And we've got 1, 2, 3. Very, very textbook boomerang. And there we go. This is our entry at the bank level. Stop loss can be just above the banker block. But again, I'm going to cover stop losses in more detail because we could actually redefine our entries and our stop losses when we implement the 1 minute time frame, the 15-second time frame, and other variables. But right now, again, this is just a basic example of the boomerang setup, right? Again, we've got 1, 2, then we've got the third tap and we've got the fake out. Again, the third tap entices traders to go short. They then get stopped out, and then voila, we've got the boomerang active. So this is just an example. Now the slingshot is extra confirmation, or you can look at it as a stop hunt of a boomerang, but we could also use the slingshot and combine it with a boomerang just to increase the risk reward, the probabilities, and other factors involved. So what a slingshot is now is the same principle, same scenario. And then what happens is, okay, there's a pullback. It triggers either a bank level or even just an imbalance, or it just drops, right? Entices traders to go short. And then what happens next now is there's a stop hunt of the banker block, right? There's actually a stop hunt of this level. So bear that in mind. So what happens now is once you've identified that area, whether it's a liquidity pool or there's a bank level there, or there's an imbalance or a banker block, there is a stop hunt, right? So let's do this one more time. Again, price is rallying. It's stuck within this range, right? Rallying. There could be a pattern or whatever it is, but just watch out for the stop hunt of this significant high. Once you see that stop hunt, there we go. Stop hunt, liquidity has been filled. Now the slingshot it's not activated yet, but it's pending. What you need to watch out for is the previous low. Once there's a break of structure of this significant low, we then wait for the pullback. And on the pullback, this is where you're going to see obviously a banker block down here and most likely some equal highs. Once you see the equal highs, we then look for a retest of the banker block and then we sell it. So really, really simple stuff. This will be our equal highs down there, and there'll most likely be banker block from this area down here, and then this will be our setup. You might not always get the perfect equal highs above this pattern. What might happen now is this. You might get something like this. So let me update this and delete all this. So price can rally, form a boomerang or whatever patterns and strategies here. It could be a rejection, even a new low or a rejection of this level, who knows. And then what happens now is, boom, there's a stop hunt of the banker block or the most relevant structure. You get that level, then there's a structure break. You still don't enter the trade, right? Wait for the pullback, and then you'll see there's a significant high here, a new low, as you can see, break structure. Then we zoom out, you'll see some equal highs. And on the equal highs, again, we need to look for a stop hunt of the equal highs and the previous structure. And then you look for a stop hunt of this area, and then you get involved on a short, sorry. So stop hunt of this significant area. So we're entering here. This is where it's valid. Wait for the break of structure. Then price pulls back, wait for the other significant new low. Since it's broken the structure, it's made a new low, and then you wait for a second stop hunt of this particular area. Just make sure there's some equal highs there, and then this will be your entry with a pretty decent risk reward. Okay, now let's look at this particular example with the slingshot. So again, price is dropping, makes a new low. There's commitment from the sellers. We're now expecting a pullback towards the area that took out structure, as you can see here, made a new structure low. But then we're looking for a stop hunt. Once there's a stop hunt of this particular area, we then wait for the market to obviously drop to the downside, wait for this significant low to break. Or in fact, just wait for the market to change sentiment. So we've got, let's say something like this. We've made a new high, right? Since we took our structure, this is the new significant high. This is the most relevant significant low. And if we get a break of structure, sorry, if we get a pullback and then it breaks, then this is the significant high and this is the significant low. So now we've shifted structure. So now what we're expecting is a pullback towards this area here, and then we sell it. You know, that's one schematic. The other scenario, again, this is why you need to understand all the confluences, is price doesn't have to just reverse perfectly here just because it was the most relevant structure break. There could even be a stop hunt of this little high, right? And if we get a stop hunt, then we obviously sell it. But 8-9 times out of 10, there's going to be a reversal at this scenario or a reversal at this scenario. Now, which one do you take? Again, you need your confluences. Is there any equal lows in? Is there compression leading up to it? Is there maybe a pattern where you're expecting a stop hunt? Is there a larger trend line here? You know, you might have two confluences at plan A, which means plan B is very likely, or there might be 4 or 5 confluences at plan A, which means plan B is unlikely and price will just drop from there. So again, this is the redefining of the actual slingshot entry, plan A, and there's obviously plan B. Now let's look at some of the different variables that you might have at plan A and plan B and what to do when you're faced with these scenarios. Again, always have a probabilistic mindset. Never have just one outcome, always have a probabilistic mindset, have multiple scenarios. So again, price is dropping, right? There is a break of structure. Okay, fine. Let's actually highlight that. There's a break of structure. And we've got a banker block. This is the most relevant banker block, right? So now what we're expecting is, okay, a pullback towards the banker block. If we see a setup and we see a boomerang here, right, then we take it. But right now we're looking at the slingshot. The slingshot is a stop hunt of the banker block. Once we get a stop hunt, what's happening now is price has now made a new high. As you can see, it's made a new high. So now the market is actually bullish. So you do not want to sell it. Market is now bullish. We want to wait for the market to change sentiment again, right? So now, again, follow the market round. High, low, high, low. This is a pullback in the middle. This is the most significant high and the most significant low. We are in bearish territory. However, price eventually done a fake out of the boomerang or a pattern, and done a complete stop hunt, and it went long, made a new high, took out structure. This is the significant high, and this is the significant low. So now we're in bullish territory, unless this particular structure breaks to the downside. So now a few things can happen. Either price can break structure, we catch the pullback and we sell it. Fine, that's one scenario. The market is not always going to be perfect. What might happen is it might pull back, it might mess around. And again, anything in the middle, guys, is just a pullback. So, you know, the same thing that we did here. We've got the significant high, the significant low. All this is a pullback. Now we've got the new high and the new low. So anything here is just a pullback. Even if it makes a new high here, makes a new low, makes a new high. As long as this is not breached, we are still in bullish territory. This is just a complex correction. So let's actually zoom in on what could potentially happen. Price is dropping, moving up, it's still stuck within this range, and then all of a sudden, boom, there is actually a new break of structure. As you can see, caused by who? By this banker block here. So now this is the most relevant banker block. Let's update this. So now we've completed the slingshot, but the entry is still not here, right? Think about it. You've got a setup here or a boomerang, whatever setup, and it fails because it does a stop hunt. But now there's a second opportunity with a higher risk reward chance. So now with the slingshot is a stop hunt of the banker block to the left, as you can see. We're looking at this significant area. It's made a new high, it's done a stop hunt, but now you need all the confluences in your arsenal. You want a stop hunt of retail, and then you want to break a structure to the downside. And now we are in bearish territory. So what could happen next? Again, we could either get compression, and then we can look for an entry. That's one scenario. Another scenario might be price might just go long, it might just form some equal highs. And then boom, we've got an entry, right? Another scenario might be that price, it climbs up a bit and then it just drops and you're like, oh, hold on a minute, what's happening? Again, ignore this if it's made a new low here, because this significant low has not been breached. Just because it made a new low here does not mean that the setup is invalid. So what's likely to happen now is you might get a stop hunt of this area and then you go short. That's another scenario. You might even get something like this where price pulls back, it drops, and then after we see another stop hunt of this area, but it doesn't really fill our orders. And you're like, well, hold on a minute, why is it not filling up, right? But there might be some equal highs that are forming, and then you can take your trade, right? Or maybe there might even be a bit of a larger boomerang, 1, 2, 3 rejection, stop hunt, and then it drops. So this is the larger boomerang that we're looking for, right? If it fails, we look for the slingshot, which is number 1, a stop hunt, right? That's the first checkbox. Number 2, wait for the market to change trend. We've completed that. Number 3 is we look for the pullback towards the point of interest that broke this break of structure, which is the second one. This is the first one. This is the second one, but this is high probability because it's done a stop hunt of liquidity above here. So again, in this scenario, there's going to be multiple options and probabilities.